Are you buying the dip on Amazon? I'll tell you on today's video if I did after the company announced these Q4 earnings. We'll talk about a number of different things. First of all, just how huge this business has gotten from a revenue perspective. There's just nobody in the quote Mag 7 or FANG stocks that are putting up this type of revenue. Also, very cool over at Amazon is the fact that now your e-commerce business is almost as profitable as the AWS business. There was one day when that was not the case, and Andy Jassy has done a tremendous job turning the e-commerce business into a profit printing machine. Now, we also got guidance from Amazon in the Q1. We'll discuss that as well. We'll also talk about the capital expenditures as we're looking into these major cloud providers. We're all taking a look at CapEx because if you're like me, you probably got a couple of bucks in some of these semiconductor names. In the last quarter, Amazon spent $27 billion on property, plant, and equipment. Now, unlike Google and Microsoft, and certainly if you look like an Oracle or something like this, this is some warehouses. So it's not a pure CapEx number just on data centers, but it is a massive acceleration over where you were last year on this run rate and even over the previous quarter as well. We'll discuss all of that, and then we'll look at this one technically as well. Shares are bouncing around in the after hours, and it could be a buy the dip opportunity. What is going on, investors? Hopefully you guys are doing well out there. Look, Amazon, like investing can kind of be a simple thing, right? When I'm looking at these stocks, one of the first things that I do is this stock actually beating the S&P 500? Because if you're going to invest in individual stocks, I don't care what your feelings are about the company. If it's not beating the S&P 500, you really shouldn't even be looking at it. So in the case of Amazon, yes, we've beat it for the past year, for the 5 year, for the 10 years. Doesn't matter how you stretch this one out. Now, past performance doesn't mean it will continue on in the future, but there are some trends with Amazon that we've been keeping an eye on this channel, and they've been absolutely fantastic. Revenue growth about 10.5% in the most recent quarter. Obviously, this is the fourth quarter. Everybody's buying stuff on Amazon. Okay, $187 billion worth of revenue. They beat expectations. For the Q1, though, coming in a little light, and this is what having shares be under pressure a little bit in the after hours. We'll see. Sometimes I record these Amazon videos, and by the end of the video and by the time it's uploaded, shares have swung another 4 or 5%. That's just the nature of these types of things. But regardless of that, the guidance for the first quarter was a little light. Expectations from Amazon are between $151 and $155 billion. Expectations for Wall Street was closer to 158, including the high-end estimate that was actually closer to 161. Check that person's pipe. Not coming anywhere close to that. The low end even was one for 154. So this is definitely a disappointment from Amazon on this first quarter guidance. And so you can't sweep that under the rug. Now, it also brings to the question Q2, Q3, as you move into the back half of this year. Are you really going to do $163 billion in Q2? Are you really going to do 175 in Q3? We'll see what happens. Potentially possible for Amazon. They've obviously got a number of different business units running. Talk about those here in a second, particularly when we get to this slide over on Amazon. We'll dissect the different businesses. Interesting stuff happening in the third-party sellers. We'll see if Amazon makes some adjustments there. Now, revenue came in at that $187 billion. What I've noticed, though, with Amazon, during the Jeff Bezos era, the revenue would grow, but the operating expenses would skyrocket. Look at this cost control over at Amazon. Again, revenues grew by 10% year over year. So your top side grew 10% year over year. You'd assume your cost of sales continue to go up, but look at your fulfillment from $26 billion up to just $28 billion, a modest increase there. Look at your tech and infrastructure from $22 billion up to $23.5. Very modest jump there as well. In fact, less than 10%. Sales and marketing from 13 up to 13.1. So just a very small bump there. And your general administrative actually went down year over year from $3 billion down to 2.9. Even though they're bringing those people back to the office over at Amazon, they've done a nice job controlling costs on that G&A side. This has skyrocketed operating income from $13 billion last year all the way up to $21 billion. Folks, we added $8 billion to the operating income side. We are now printing $21 billion over at Amazon. For the full year, you did 68. So look, the fourth quarter is going to be great. It's going to be great from a revenue perspective. And just based on what Andy Jassy is doing, it's going to be great from the operating income side. This is not going to repeat on a $155 billion revenue quarter, but that's where you're at with Amazon. Flow down to net income paints a similar story. $10 billion last year, $20 billion of net income in the most recent quarter. It's going to give the company plenty of money to reinvest. Amazon kicks off their financial sheet with the cash flow statement, and they're showing you in the most recent quarter, they did $45 billion worth of cash flow. So despite one thing that you'll notice there is the net income doubled over at Amazon, but your operating cash flow actually didn't go up by that much year over year, from $42 million up to $45 billion. So you didn't add quite as much there. Company is investing in their property, plant, and equipment like we talked about, okay? Largest cloud provider, continue to invest there, obviously doing stuff in AI as well. Some of this property, plant, and equipment, like I said, is warehouses, although that has slowed down a little bit after the kind of massive expansion that you saw during the pandemic. $14 billion of CapEx spend last year. $27 billion, $27.8 billion in the most recent quarter. Hello, that is a double. And what I wanted to show you is where was it the previous quarter? Because like year over year, we're obviously just everybody's just spending money in the cloud space. Well, it was $22 billion in the previous quarter. So you went from 22 to 27. Now I'm recording this before the conference call. It's something that I'll discuss probably on the weekend semiconductor show over on Equity Empire. We'll also talk about it on the Friday Fang Stock Recap show, where Amazon is going to come in for the CapEx. I'm assuming that information will come through on the conference call. We'll discuss that. That is also something that could move the stock up or down. So if you're looking at Amazon at a later date, it could be the CapEx number moves that up and down, because if they spent 27 in this quarter, my guess is this is approximately the run rate. You're probably looking at $100 billion CapEx number for Amazon in the upcoming year. Last year, they spent 83. Okay, now keep in mind, the company generated $115 billion of operating cash flow over the past 12 months. So it is something that the company can afford, but you're not going to have massive amounts of cash probably flow through to the balance sheet, which we'll look at here in a second. We pointed this out for like over a year on Amazon. After Andy Jassy has kind of come in, they've really started to streamline the cost, and they've done a very nice job turning that e-commerce business, which has massive revenues, into a profit printing machine. Look at this. $9.3 billion of operating income for your North American e-commerce business. The international business, which was largely unprofitable outside of maybe a few quarters during the pandemic. $1.3 billion of operating cash flow for your e-commerce business. You're over $10.5 billion worth of operating income. If you combine the two, it basically matches AWS. Now, understand that's a fourth quarter, revenue's higher, shopping, all that type of stuff, but it shows you the trend that we're going. We're probably a year or two away from every single quarter the e-commerce business could be more profitable than AWS, which is still growing. It's over $107 billion worth of revenue over the past 12 months. They printed $40 billion of operating profit, very consistent, kind of printing $10 billion, a little over that, to the operating income side. When you look at the balance sheet over at Amazon, they've got a boatload of cash. That is $100 billion worth of cash. It is balanced off, though, by about $52 billion worth of long-term debt. So it's not, all cash in the bank, but it's a lot. They do also carry some inventory as well. I did notice, I don't think this really means a whole lot, but you have a slightly more elevated inventories over this company. Some of that might have to do when you look at third-party sellers. These are just kind of your average Americans and other people around the world that want to sell on Amazon. The growth rate has absolutely shriveled up in that business model. It was a mid-teens, even 20% growth rate for the longest time, but really some price changes and some of the changes that Amazon has made there has really alienated third-party sellers from wanting to sell on Amazon. That growth rate just 9%. So it could be that Amazon is seeing that and they're picking up more inventory as they are the first-party seller, because you are seeing online stores grow 8%. That is a reacceleration over kind of the mid to low single digit the company had put up in previous quarters. You got Re-acceleration in physical stores, your Whole Foods and other places, growing 8% in the most recent quarter. That is absolutely fantastic. Your advertising services are slipping down to 18%. That is a function a little bit of these third-party sellers. Third-party sellers come onto the platform. They've got goods that they're manufacturing or whatever they're just trying to sell. Well, they're the ones that buy some of the ads. You do have some top-of-the-funnel advertisers, Procter & Gamble, those types of companies. They're going to buy some ad services on Amazon's, but a lot of it is going to come from third-party sellers. So for Amazon to reaccelerate the ad business, because 18% is lagging behind even like Microsoft, which operates like a third-tier search engine and like a third-tier social media site, their ad business is growing greater than 18%. I think it was 21, 22% in the most recent quarter. So to reaccelerate this, they're going to have to reaccelerate the growth over on third-party sellers at Amazon. In order to do that, they probably have to lower some fees, make it a little bit more attractive. Subscription services, this is your Prime and those types of things, grew 10% in the most recent quarter. AWS business, very consistent with the past several quarters, growing at about 19%. And the other business, including some movie assets, I believe, in the MGM catalog, up about 17%. They'll probably have to strip that out, put that in a different category at some point because that is growing rather rapidly. Everything looking great financially from Amazon's perspective. Shares are bouncing around in the after hours, down 3%, maybe down 5%. Stock's been in this beautiful uptrend really since the end of 2022. When you're in these big uptrends, it even broke out from the highs, the key level for Amazon, that it really kind of consolidated very tightly for a while. Was in this like 160, 170, 180 range. Once you break out, you kind of have your breakout moment. It's what we saw with Amazon. And look, I'm a simple man. I set up these channels. I divide them in half. Anytime you're underneath kind of the middle of the channel is when I like to accumulate. Amazon's financials were certainly good enough. The guidance leaves a little bit to desired, little light on that revenue side, but given the fact that Andy Jassy has turned this company into a profit center, they're going to be able to fund all the growth that they have over at Amazon, do it profitably. Company has a mountain of cash on the balance sheet. What they decide to do with that cash will also be interesting during the Trump 2.0 era, where many believe more acquisitions will be possible. This company during the Biden administration was blocked from buying a very small robot vacuum maker. And so maybe Amazon will put their cash to work here relatively soon. We'll see what happens. I bought the dip in the after hours for Amazon. Let me know down in the comments what you're thinking with this one. And if you've got that CapEx number, drop that down in the comments as well. Let's have a great discussion. Hopefully you guys enjoyed today's video. See you tomorrow for the FANG Stock Recap Show. Good luck with your investments.